What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. This has been one of the most insane weeks in the history of cryptocurrency, and arguably in the modern financial markets. The collapse of Terra and UST in terms of scale and breadth was probably one of the largest collapses of a tradable asset ever, on par with Enron, Lehman Brothers, etc. And so today I'm going to talk a bit about how Luna entered a hyperinflationary spiral that drove it to be worth basically nothing. Additionally, I'm going to talk a bit about what now, right? Because this certainly changes the landscape of the cryptocurrency market, at least for the near future. And, a lot of people are wondering, is crypto over? It's not. But what do we do now? And so I'll talk a bit about what sorts of projects I'm personally going to be looking at, because I think now is the time to really hunker down and focus on long-term investments. Cool. So that's what we're talking about today. Let's get into the video. First, what exactly happened with Luna? And I know that a lot of people are down tremendously, and it's a very emotional topic, understandably. But sometimes talking things through can help to rationalize it a bit, right? And so here's what happened. Last time when I made my video, Luna was around $18, so it was right around here. And since then, it's gone to basically zero. And so how did that happen? First thing you need to understand is how the Luna mechanics with UST work. And so the way that works is if UST is more than $1, then people will buy Luna, burn it, so take it off the market, and mint UST to increase the UST supply and bring the price down. If UST is less than $1, people will buy UST off the market and burn that and use that to mint new Luna, which is worth more than the UST that they bought, thereby taking UST off the market and, in theory, increasing the price to bring it closer to peg. And so that normally works great when Luna, when it's fluctuating, the supply of UST is fluctuating 1% to 2% a day at most. It usually doesn't have any sort of, normally it works fine. But basically the problem is that the price of Luna dropped so much as people were exiting UST, exiting Luna, that by the night of the 11th, the market cap of UST was somewhere around 10 or 11 billion dollars. And basically the market cap of Luna was less than half of that. And so the problem is you still had people selling $1 billion of UST because they were trying to get out of Anchor. They no longer trusted it. They wanted to, exit with maybe 0.7 for every dollar, 70 cents for every dollar that they put in, and people were willing to do that. And so that basically was driving UST far below peg, and basically gave an opportunity for people to buy millions, billions of dollars of UST and burn that to mint new Luna. But because the market cap of Luna was significantly lower than the market cap of UST, it meant that the supply of Luna was heavily, heavily inflated. So if the market cap of Luna was $2 billion and people bought $1 billion of UST to mint for Luna, then the market cap of Luna would increase by 50% all at once. And if people are doing that, a lot of times they're looping it, so they sell the Luna to buy more UST and repeat, or they just want out of the system, and so they just sell the Luna and walk away. And so basically that started slowly, and it probably started a little bit somewhere up here, but it really started to accelerate around the time Luna was in the 20s. And then what happened was it hit a point on the 11th, like I mentioned before, where the market cap of Luna was half that of UST, where all of a sudden the sell pressure from this new Luna that was being minted was so much that the price of Luna dropped from around $13 down to under $1 in about 10 hours. And again, a lot of that is from people selling it off, but a lot of it's from that inflation where, the supply is increasing significantly all at once. And, and then it sort of fluctuated around $1 for the better part of a day. And then it dropped 99% again to be 1 cent. So, it went down 99% to $1. Then it went down 99% again to 1 cent. And then it just kept doing that. The supply just increased at a faster and faster rate. And, I guess the past few hours, it's maybe recovered a bit, but it's basically, even now I say it's recovered. It's now 0.0001198. I mean, that is just insane. And if you look at this circulating supply, it was 94 million circulating Luna on the 9th. Then 147 million, so it went up 50%. Then 1.3 billion, right? So basically 10x. Then 158 billion, so 100x. And then 6.5 trillion. And so to put that in perspective for Luna, even if Luna got back to the market cap that it was at before, each Luna would still be worth something like a penny. So this is just, insane. I mean, this is hyperinflation at its finest. And, it's quite dramatic, right? There's a proposal right now that Do Kwon made, that would sort of reset Luna and do a Luna 2.0 without UST. We'll see what happens with it. I don't know. I mean, I think there's a lot of people who got wrecked big time, and I think it'd be really tough to gain people's trust, but I don't know. Luna has a strong community, so I hope they're able to find some way to compensate people. I think they also have some questions to answer as far as what happened with all that Bitcoin they bought, because they bought billions of dollars of Bitcoin, and I haven't seen a clear answer on what exactly was done with it. But I'm hoping that they can use that maybe to compensate people that lost some money. Although, I don't want to give people false hope, because that's just speculation. And so that's basically what happened with Luna. And so what now, right? Because this is obviously quite dramatic. I mean, when I heard about this first, I was shocked. Then I was, almost, you had to just sort of watch in awe or, sort of dumb amazement, because it just dropped so much. And then, I got a little bit angry, just because thinking about all the people who lost all this money on it. And I think a lot of people felt that way too. And I don't know who's responsible. I've heard different theories. Some people think that it was done by someone that, affiliated with regulators. Some people think it was done by Wall Street. Some people think that it was done by other crypto funds. I think probably some collaboration between a crypto fund or crypto whale and some sort of financial firm that could lend them capital. But I don't really know, right? The amount of money that it required to do this, which was probably in the hundreds of millions or maybe a billion. Lots of people have access to that sort of capital. So I'll be waiting, like all of you, to find out who it was. But basically, what now? Well, one thing is probably there's going to be more regulation because of this, especially on stablecoins, probably for the rest of DeFi. But we already have the Secretary of the Treasury, Yellen, talking about how this specific situation shows the need to regulate stablecoins. I think a lot of people who are from sort of that world maybe overestimate how easy it is to regulate DeFi, especially when you have privacy networks, you have privacy coins. I mean, you have servers that are based all over the world. Unless they're just going to completely destroy off ramps, there's so many ways to swap things on chain that it's very difficult to regulate. But I do think there will be some attempt at regulation now, maybe even a CBDC, and that's really unfortunate, right? It's nice when people are protected, but I think that part of the beauty of crypto is that right now it's sort of like the Wild West, and that's what makes it so fun. Another thing is I think that this probably killed a lot of retail interest for a bit. I mean, a lot of people lost big time. Terra had brought a lot of new people to crypto, and a lot of them will honestly probably leave the space, and it's unfortunate, but I don't really blame them, right? You lose a lot of money. You kind of say, screw this and leave. And that seems likely. And does this mean we'll enter a bear market for a few years? Maybe. It might, until something else comes along to sort of propel things upwards. I think there'll still be opportunities though. And if nothing else, it's another period to accumulate coins at a price that's lower than they were. And the thing I'll say is that even if we do go into that period, the people that get rewarded will be the people that stick around. Most coins went down 90 to 99% after the 2018 or 2017 to 2018 sort of market. And then a lot of coins went down 90, 99%, sometimes even more. Good coins too, like Ethereum. And people who stuck around, bought them when they were hovering around the bottom, were rewarded tremendously this bull run. People who got into NFTs and DeFi back in 2020, 2019 even, they were buying things at stupidly low prices. And and did very well over the past year or two. And so that being said, what am I looking at now for my portfolio? And this is not suggesting to you what you do, but this is sort of what I'm looking at and how I'm looking at the market. First is thinking long term. Don't try to make it back in one trade. Personally, I'll say this: I wasn't exposed to Luna and UST personally. So although I have other crypto assets that were hurt, I did not have exposure to Luna and UST. But almost everyone is down right now, unless you were shorting the market. And don't try to make it all back in one trade. Thinking long term, and focus on quality projects that will be here for years to come. So I've covered a lot of yield farms in the past on this channel, and I think that there's probably some interesting projects that might give liquidity rewards. But really, right now is the time to be looking at projects that you think are going to be here in a couple of years, because it's possible that it will take that long for retail interest to return. And so which projects am I looking at for that? Well, there's obviously Bitcoin, right? Bitcoin is store of value. It is the original crypto asset. I mean, some people would say it's not really crypto, right? It's Bitcoin. Then there's Ethereum, largest smart contract chain. Ethereum is going to be here to stay, I would say most people would estimate. And, does this mean that it can't go lower? No. If the market were to crash more, Ethereum could go lower. But there's a good chance that in 5 years, Ethereum will be around, right? And if you believe in crypto, you should believe that Ethereum will do relatively well. And those aren't very exciting. Another one that I'd add to this category is actually Monero. Monero is, if you're not familiar, it's like Bitcoin, but it's completely private, heavily encrypted. You can't view blockchain records. I think there's actually always going to be a demand for this sort of thing. And I actually think payments are probably one of the use cases of crypto that's going to take off first, because there is a concrete demand for private payments, in private payments that settle instantly, that are totally untraceable. There's always going to be a demand for that. And I think that probably, given some of the geopolitical events in the world, there's probably going to be an increasing demand for that. So Monero is one that I actually like quite a bit, even though it's not your traditional DeFi coin. Moving sort of down market cap a bit, although this is still a major, we have Chainlink. So Chainlink is one of the most fundamental projects to DeFi. It's, the premier oracle, and almost any reputable DeFi project has Chainlink as a partner. But the thing is, Chainlink is also down almost 90% from its high. It was over $50, and now it's just around $7. So, a lot of people thought Chainlink would never get under $10 again. Well, it did. And, part of the reason that doesn't have a ton of utility yet, but they're adding staking at some point, and they're adding the CCIP, which will basically allow for cross-chain smart contracts using Chainlink, and people will be able to build smart cross-chain applications. And so I think that that these sorts of things will, along with the fact that it's the premier oracle, means that Chainlink is going to be around, right? And so Chainlink, Ethereum are simple ways to get exposure to DeFi without having to risk investing in a project that could die in a bear market, because projects die in bear markets. And then, those are sort of the majors. But then I am also going to be looking at some smaller projects, because that's how you get sort of the bargain basement prices right now, while things are really cheap. And so what I'm going to be looking for is projects that have a relatively low fully diluted value. There are projects that are cool, but if you look at their fully diluted value, it's insanely high. And I also want projects that are bringing in concrete revenue and paying that out to stakers. And a few of the ones that I'm looking at, one of them is GMX. I've talked about it on this channel before, but it's really cool. It's a decentralized perpetual exchange. And, you can see their market cap is a few $100 million. So that's the fully diluted market cap. So decently high, but not insane. But they're bringing in, consistently, even when, throughout the past few months when a lot of projects weren't doing great, they're bringing in usually a few $100,000 most days. And, that's real revenue they're bringing in, and they're paying it out to token holders. And so to me, that's sort of the example of the type of project I like. Another one that's cool is Curve. Curve is maybe the most important project in DeFi. And Curve is basically the largest like asset exchange on Ethereum and on many other networks. So use it to swap stables, or use it to swap Lido staked ETH with ETH, and so on. And in Curve, well, actually, Curve had one of its best days ever yesterday because of the drama with UST and then further drama where staked ETH started to come unpegged from ETH, normal ETH. But regardless, Curve is bringing in, let's see how much revenue it brought in yesterday. It brought in $3 million of revenue yesterday. So that's like, you could think of it as a business, right? Another one that I like is Balancer. Balancer is an exchange on Ethereum, and this one is somewhat inflationary, so I don't like this quite as much. But even, with the inflation, its fully diluted market cap is under $1 billion, and it's bringing in about $500,000 in revenue a day. So I'm sort of thinking of which projects will, they can't just have the numbers, they also have to have the team and the technology, but which projects have that and are also bringing in revenue, right? And luckily, this information is all easily findable. I use Token Terminal to find a lot of it. Some other DeFi projects that I'm looking at actually is Terra and Cosmos too have been completely just hammered this week. Any DeFi project that was on Terra is down more than 90% right now. Kujira, for example, is a protocol that let you bid on liquidations from Anchor. And that's a cool tech, right? I've described that to many people who aren't involved in crypto. Say, people get liquidated, leveraging assets, and you can buy the liquidations as just a normal person. And that's a pretty cool concept, and that could be applied to any chain. And, and the Kujira team has said that that Terra, the blockchain, is paused. They're going to be moving to another chain, probably their own Cosmos chain. I'll be looking at projects like that as well that, maybe are down 90 to 99% from their all-time high, but that are still continuing to build, right? And again, that are bringing in actual revenue. And those are basically the sorts of DeFi projects I'll be looking at. And then the other thing I'm actually going to be looking at, I don't really cover this as much on this channel because I'm not an expert, but I think NFTs are going to be here to stay. And at some point, if we haven't already, we're going to enter a major bear market in NFTs. And so, for example, if you look at the floor of Bored Apes with their land sale, it was up a lot at 150 Ethereum, and then now it's down at 98 Ethereum or 99. I'm not looking to buy a Bored Ape right now. However, I may be looking to pick up some NFTs at some point as maybe we go into a longer term downtrend, and I expect that many of these will go down in price significantly. And I'll see who continues to build and maybe which new ones arrive that have utility and that could potentially be the leaders in the next NFT bull run. Because I honestly didn't really buy any NFTs this past year and feel like I kind of missed out on it. But, it is what it is. I decided to focus on DeFi instead, but I'm definitely going to be looking for some NFTs as we go into an extended bearish period, which I think at some point, if it doesn't start this month, it'll start at some point in the next year. And that's basically the main things that I'm going to be looking at. As always, I think it's really important that we watch out for new narratives, and I'll be covering those on this channel for sure as I come across them, because almost nobody expected NFTs to take off at the start of 2021. There were only a few people. Most people were focused on DeFi. At the start of 2020, almost no one had even heard of DeFi, right? And so every new year, every new cycle brings new narratives. There will be other opportunities to get in early on things if you stick around and if you pay attention. That's all I got for today. Let me know what you're going to be looking at as things stay bearish. And until next time, this is Dynamo DeFi.